Welcome everybody to another 144 Analytics video where we try to explain how to use the Fibonacci retracements with the 144 rules and guidelines. In this one we're going to go over the oil and meal, and that two different trends but following the same rules and guidelines with the 144 rules and guidelines, as the beans have been trading sideways for this whole year in a bigger range, but still within a dollar range, but within two major Gann squares of the 961 quarter and the 1057 half. They've just moved sideways between these two. Now we want to just show you then what's happened with the oil and the meal. Now in the oil, you have this market that has been in an uptrend since, in that same, even longer, but going back, we'll show you where, following the rules, and that how a 78.6 retracement can be the end of the bull move or the beginning of one. And then we'll just go here and you can see that this bottom was right in here is where this market started from. Until this market made a new high, you still had another 78.6 retracement here where the market started another run from. Once that market did take out this previous high, we can throw it back to the contract low and then start. What should happen if we do have a trend is hold 38% back. That's the golden rule for us. It's any market that's going to continue its direction should hold 38.2%. In this case, you can see here right where it went down, it went under it, closed back above it, and on it kept going. Now here you even have markets that are really strong only go 23% back. That one quickly went up to a new high, so now we can move the retracement back up again, and then now down. This setback from here went right back into 38.2%. Now you see, I mean, all of these lows, you're going to see the same thing in reverse in the oil and any other market that has a trend. They're going to follow these things or else the trend's changing. So here again, 23% back to the contract low, made a slightly higher high. Now then we went up here, topped out on this major Gann square, came back 23%, and then they really messed with this one, but we're always on every move. We're watching the retracements on the way back up as well, and you can see here it was 78.6% where this market stopped. This is where the bull move started. This is where at the temporary time here where it ended was the failure to make a new high in a 78.6% retracement. That took it all the way down to then 38% back to the contract low. We had a good pop here up to another major Gann square. Now it has sat here for a long time just going sideways on this market, and this is what it needs to hold to keep the long-term trend positive. And if so, we'd be looking for new contract highs, but again, watching all the retracements. Anything that can't get back above 38% of this would be a negative sign, and ideally a run from here could take us back to 78.6, and that's what we would be looking for. Now when you take the meal, you get the complete opposite thing here. This was 38 back up to the contract high, so now we take it down to here, and this was 38 then with this new low back to that contract high. We didn't quite get there, but when we take this high and this low that it made here, 61.8 is where this market stopped. 61.8 should send you 61.8 the opposite way of where it just came from, and that's what it did here for a while, back and forth. Once it did go make that new low, you can see now the market's really weak because it could only go 23% back. As in our rules and guidelines, that's what we're telling you. A really weak market will only go 23% back. Now we have where the market here couldn't get to 38, fell short of it here, but we'll watch all the highs and lows and what's happening. This is the next most important high after this one, and right here it hit 38% back, and that then did send it down to a new low. Now in a much shorter term, short frame time frame here, we have just this market where we're watching it to see if it could turn from here, and we got 38 back, and so far it's been unable to turn that. So the short-term trend would turn positive if we can get through this 38 back plus the 282.40 major Gantt square. That would be a good sign for this market, and we'd be looking for 38 back up to that high again as our first target. Now, showing you how all these markets are the same. These rules and guidelines are for every single market. We just like to put in different markets and show you the exact same rules and guidelines. This is where the bonds bottomed this morning on the futures, or this year, back in December. And again, if we just start looking at the retracements here, we're not even looking at what's up on top. We're going to try and find if this trend is a trend. We know that 78.6 can be the beginning of a new trend by failing to make a new low in this area, and you see how clean that is. The next thing is it makes a slightly higher high, but then, like we just said, if the market does have a trend, it should hold 38.2%, and that's exactly what you did here. It sat on it for a while, but the thing is that it just held it and kept going, and after that went on to the new highs. So then we bring up the new retracement here, and even this setback just missed 38 back of this whole move, keeping it still a bullish move. Now, as far as what's going forward, again, we had said that any market that's extremely strong would stay above 23%, so you're going to watch that area, 1706 below, and then it would have to stay above 1526 with any new or any setback. Obviously, with new highs, all these levels are going to move up, and our long-term target here is 124 based on other retracements. So I hope you can see on all these charts, and that you will do the same. You have to, the only way you're going to really grasp it even better is that you start putting these retracements on. Look at the markets that have uptrends. See what lows they're holding, what retracements are holding. In a downtrend, you're going to find the same thing if they truly have a trend. If you're trading sideways, you're going to see a lot of 78.6 retracements and a lot of 61.8 retracements. So that's for you to do, and you to understand, and you to start practicing just following the markets. And this should be almost the key thing that you're doing. You can have your opinion of where the market should go. These will be the numbers that'll tell you if you're right or wrong and what you need to hold or take out. So people that are bullish and bearish can use the exact same numbers, because knowing how they affect or how the markets move at these levels will make you either you're right or the other person's right. So just watch these levels and have them all on your charts, so it'll give you a much better understanding of the flow of the market, and you can go way back in time on these things too, so the bigger numbers that are out there. This is just the daily here, but you got to look at the weekly. What is the all-time high? What's the all-time low? What are the retracements in all of those levels? So we hope this is helping you. And if you happen to trade the grains or livestock, we'd like to see you become a premium member. And we give all of these levels on a weekly basis of what we're looking at, what we're looking for based on our swing point for the week, and what the direction of the market is, and what should hold, and if it does, where it should go on the upside, and if not, where it should go on the downside. Also, we'd like to see you subscribe to our channel here, and if you like it, please give us a thumbs up. And until the next video, best of luck.